There's two key threats to economic growth. We're going to show you where this is coming from and what we should look out for moving forward. This is from the news last week. Threat number one, squeezed profit margins. Well, we had a slew of economic numbers last week, including the PPI, Producer Price Index, on a year over year basis, rising at a rate of 3.5%. This is the fastest rate of growth on wholesale prices we've seen in quite a long time. Also, we can take a look at core PPI on a year over year basis. Of course, this excludes food and energy, the more volatile components. This rising at a rate of 3.6%, the second fastest rate of return, again, in many, many years. Wholesale prices are certainly on the rise. Now, compare CPI. We know we had a hot consumer price index number last week, also a hot producer price index number. In blue, PPI. In yellow, CPI. And we can see over the past 4 months, producer prices are rising more than consumer prices. Here's another way to look at it. This is CPI. You're just taking the year over year number. You take CPI, subtract from that PPI. And what we can see here are now 4 consecutive months in negative territory. What does this mean? It means for 4 consecutive months now, producer prices, wholesale prices are rising more than consumer prices. There's implications to this that we should not ignore. When PPI rises more than CPI, well, this could be the result of cost pressures, rising wholesale costs. We could also see supply chain issues. Think of the eggs crisis, for example. When there's a break in the supply chain, wholesale prices rise. We also see changing policies. Think of what's happening in Washington, for example. Now, we don't know necessarily that what's happening now in Washington is yet reflected in the numbers, but that could result down the road. And also, and more importantly, profit margins are being squeezed. You see, when the producer has to pay more for raw materials, but they're unable to pass on these extra costs to the consumer, their profit margins are being squeezed. Why is this important? Think of the S&P 500. Think of corporate earnings. These corporations, their profit margins are the result of the difference between PPI and CPI. That is being squeezed. In fact, 4 consecutive months in negative territory. That was threat number one. This is number two. We call this the unexpected. Last Friday, it was reported, this is Reuters, U.S. retail sales post biggest drop in nearly 2 years amid winter freeze. In particular, they cite that the U.S. retail sales dropped by the most in 2 years, likely weighed down by frigid temperatures, wildfires, motor vehicle shortages, suggesting a sharp slowdown in economic growth in the first quarter. Why is this important? Moving forward, when we turn on the TV and we see any kind of natural disaster, any type of situation that could affect the supply chain or wholesale prices, we know the market, the economy is kind of in a vulnerable spot right now. Any further disruption certainly could be felt. Now, let's dive into the retail sales number because there are some revelations I think that are worth making note of. Here's retail sales, gasoline station sales. For those of you that have been watching us for quite a while, this has been a weak number. Not anymore. On a year over year basis, it's up 2% now. Gasoline station stores sales and also overall energy sales, where it was the one component that was kind of keeping inflation in line. No more is that. Also, retail sales for grocery stores. That's up 3.9%. That's the fastest rate of return. That's not good. Now, on the other side, we see evidence of slowdown in growth. Remember, again, for those of you that have been watching this for quite a while, we've reported month over month non-store retailers. That's online shopping, Amazon, things like that. That's been very strong. That's kind of sustained the economy for a while. That's not the case anymore. It's up 4.7%. That is the lowest high that we've seen, the slowest rate of return we've seen, well, in quite a while. So we are seeing a shift in the economy. Looking at the economic calendar moving forward this week, we have a few big numbers that we certainly should make note of. On Tuesday, Empire State Manufacturing Index and the Home Builder Confidence Index. On Wednesday, housing starts, building permits. That speaks again directly to the housing market. Those are forward-looking numbers. On Thursday, Philly Fed, that's another manufacturing number, a big one. And then on Friday, we have existing home sales, more home builder numbers, also consumer sentiment. So we have a lot of home builder and manufacturing data coming out this week. And also, again, watch the TV for any could be large disruptions in the economy. Well, the economy doesn't seem to be on very solid footing these days, so that could be felt. We hope this has been helpful. We look forward to seeing you back soon.